It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
This is the Tax Lady, and this is our hour to talk about taxes, and we want to make sure we save you money. And if there's a way that we can help you to cut a tax liability, we got 6 weeks left before the new tax season, and that's what we're here all about. And I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you. I got a cold.
Oh, you're allowed.
I am. And Christopher Fabian.
Hello, Esther.
Hello, Christopher. All right, so we're going to talk taxes, and really, I just thought, when I took a look at what we want to talk about, I think people don't understand. Do you think people understand the tax code?
No.
Not at all.
Everybody's busy.
But I mean, it's so confusing because there's some things that are taxed as ordinary income. There are some things that are taxed as capital gains, and the bottom line is, when you're making a financial decision, the pot that you decide to take the money from, or the pot that's going to make the income, can be way different, right?
Yeah, and the funny thing is, when the taxes were first instituted, the idea was, I remember you and I talking not so long ago, is you got a little book in the mail and you were supposed to do your own taxes, and it was the 1040 book, and
right.
Things really have metamorphosized
because there's so many computations now,
yeah,
and limitations and everything. So anyway, I thought we'd talk about how different income is taxed differently, and then we're going to do a little exercise on if in your situation you needed this money and you get it from here, how much it's going to cost you in taxes. So hopefully in the next it's about 6 weeks, 7 weeks before the end of 2025, that if you need money for the holiday season, that you really are smarter about where you get your money from.
Yeah, most definitely. I had somebody call me up the other day, and they needed money, and they were considering, they were under the age of 59 and a half, taking it from their 401k, and we sat down and teased it all apart, and we found that it would be better if they get a loan against their 401k, or maybe you can get an early Christmas gift from your mom or dad, or there's other options.
Right, there are. And the thing is, if you don't know, though, I mean, what you don't know is ignorance is not bliss when it comes to taxes.
Right.
Right?
Yeah.
All right, so let's talk about, and again, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Would love to hear what you have to say, because what happens is I can see when I talk to taxpayers who are going to do something that's going to cost them money, and I show them an alternative. Do you find that, and Chris, you might answer this, do you find that they really want to do what they want to do?
People have their minds preset when they ask us questions, and
like they know what they're going to do, and you say, no, don't do this, and they go, I'm going to do it.
right, just like a child.
Yeah, I mean, really and truly, when we're telling you we're not saying not to do whatever you want, but let's look at a different way of doing it, right? But all right, so first of all, here's the most you can pay in taxes are for wages. Mm-hmm. Right?
Yeah.
That's at just whatever tax bracket you fall in. That's the highest rate you can pay. Same thing with interest income.
Yeah, but then don't forget there's a beautiful thing, and maybe you're going to talk about this later. Your income lives in different brackets, so all of your wages is not taxed at the highest one.
But the highest form of taxes that you can pay is wages.
Correct.
And then the next would be interest income.
Yeah.
Highest form of taxes you can pay. So when you're adding everything together, your wages and your interest, there's no like there's no fairy dust on this stuff, except if you have municipal bond interest, because that's completely tax-free federal. And if it's New York State municipal bond, it's tax-free on New York
So
State.
does that give us permission to work less?
Okay, we'll just keep going. Bonuses, if you're an employee, is fully taxable at the highest rate. Commission, same thing, highest rate. If you have capital gains and you sell them before a year, what happens then, Chris?
Tax to your ordinary income.
Yeah, short term is ordinary income.
Right.
And-
How about gambling income?
Ordinary income.
Right. And what if you sell a depreciable asset, something in your business that you had, and you sell it?
Ordinary income.
Right. And how about non-qualified dividends?
Ordinary income.
So these things are taxed the most that they can tax you. All
Yeah.
right? Now, here's things that are taxed favorably. Long-term capital gains. Explain what that is.
Those are investments of things that you have held on to for more than 1 year, so greater
it's
than 12 months.
366 days.
Right. Yep.
So if you sell them, what happens, Chris?
If you have more than 365 days, then you would get ordinary. Then you get the capital gains rate, which saves you a lot of money.
Right. So the maximum you can pay if you sell a capital asset is 20%, right?
Yes, and that's if you're in the 37%
So
tax bracket.
right. And so even though your other income is at 37%, on capital gains you're only paying 20%, so you save 17%.
That's huge.
So on a $100,000 sale, you save $17,000.
Wow.
Right?
That's a really good move. Significant.
Right. Qualified dividends. What does that mean, and how does that work?
Well, qualified dividend is a favorable thing. It's part of your ordinary dividends. They're not two separate figures. The qualified dividends are inside your ordinary dividends, but the qualified dividends have a favorable tax rate. They get taxed the same as capital gains.
Right. So just like we were talking about sales of stock that you hold for more than 365 days, if you qualify and the maximum tax rate on that is 20%. So the same thing with qualified dividends,
Yeah.
Right.
right?
Yeah.
Oh, okay.
I don't
Yeah.
know if you want me to do any of the tax or not
Oh,
yet.
do a tax, right.
It says, Esther, did you know that the IRS is stopping e-files for the year usually around now? And then there's another text around there, but usually the IRS does.
It's
stop.
usually it's usually around the 20th of November. I was just doing some research, and they haven't come up with the date yet for that.
But you have to understand that they're getting ready to change all the tax laws from 2024 to 2025. So they will stop e-filing as we move on to November, so they can get the new software installed.
Correct.
Yeah, so that is true. So if you wanted to file a return whenever it is that they're stopping e-files, it has to go paper, which takes so much longer, in excess of a year probably. And so sometimes people will just wait to file that return until e-filing opens up again in January.
In January, right. Mm-hmm. Right.
And then the next text is, how much money can a 19-year-old make a year without paying federal and state taxes, gross or not? Or do you have to file taxes if you earn income from a part-time job, no matter how much you make in a year?
Okay, so first of all, the standard deduction is like $16,000
For the federal.
for the federal, especially if you're not being claimed by your parents. Okay, and so if you're making less than 16, you're not going to pay any taxes at all. So, but you want to file to get your money back that they took out of your paycheck.
Right. But for New York State,
Right,
if
and
they
I
are,
was just going to go on talk about that, Chris.
yeah, if you're talking about a 19-year-old that's claimed by mom and dad,
And that's different.
that's totally different because New York State, the standard deduction for that is only $3,000.
little 3,500, I think, right now. But so he would have a full refund. I'm using he, the colloquial. So this person would have a full refund of federal withholding if his income is like around $16,000 on the federal, and on the state of New York, if his if depending upon what they took out, he might have a small balance due, so he'd want to file. Anyway, I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. Be back on the other side. Hey, to me, you are my family. I can't tell you how thankful I am to have such a great group of people that listen to us. I wish I didn't have a darn cold. I'm joined in studio with Christopher Fabian, Tiffany Fabian, and we're talking taxes. And we have Julia, who's been waiting. Hi, Julia. How can we help you?
Hi, I am calling because I received SSDI. Each of the years, I did not file in 2023, nor did I file for 2022 because of a hospitalization and some chronic health issues.
All right, so Julia, basically your only source of income is Social Security. Is that correct?
For each of those years, I did earn approximately $2,200 for each of those years.
Do you have children?
No children. And when I went to your agency, the gentleman I spoke with said that it would cost me $260, I believe it was, to file for both of those years.
Okay. So first of all, Julia, if the only source of income you had was wages, was there any withholding?
No withholding.
All right. So you don't have
and
enough.
I do want my refund back. I thought, is there a deadline date when you can get your refund? Because prior to that,
Julia, are you over the age of 25?
Yes.
And
I'm
under
over
the age of
25.
60 and under the age of 64.
Yes, I used to get
Okay.
refunds prior to that.
All right, so you're entitled to a small earned income credit. And if you want to call us at 632-7886, we'll make sure we get those returns filed, and it will not cost you $200.
Okay, what was the number again, please?
632-7886. And let me go through the situation in Julia's return. Nobody's claiming you as a dependent. You're on SSI, which is tax free,
No,
but you
SSDI.
did. Pardon me?
SSDI.
Which is
Social Security disability
Social
insurance.
Security for disability, which is Social Security, and that's going to be tax-free to you, but your wages are potentially taxable, but qualify for an earned income credit if you're a single taxpayer over the age of 25 and under the age of 65, and so you have a small earned income credit coming, and if you call us, we'll take care of it.
And it won't cost
Okay.
that much. Another thing, are you a property owner?
No, I'm not.
Okay, well, it doesn't make any difference. So there's.
But the other thing
There
is
was
she
that.
might get that refundable.
That's what New York State, the
from
money
New York State.
Did you get the money from Kathy Hochul? That's what I'm wondering.
I haven't received it.
All right, so give us a call, Julia, and make sure you mention that you talked to us on Saturday, okay?
Okay, certainly will.
All right, thank you. God bless.
Thanks.
All
What
right,
a
I'm Esther
smart
Golias, the
lady.
tax lady from EG Tax,
What a
and
smart
we're going to go
lady.
to Dennis. Excuse me, Dennis, I got a stupid cold.
you're a
How can I
froggy.
help you?
Hi, I've sold. I live in Clarence Center. I sold a lot this year, a builder's lot, and I wanted to understand. I'm going to have to pay. My only income, if you will, or my two incomes are interest, and I'm on Social Security. So, is there like a 20%? Did I understand you just say a few minutes ago maximum?
The maximum is 20%, but there is a minimum that if things are low enough, you might be able to get another tax break. Chris, you want to talk to Dennis
Right,
about this?
yeah. How much of a gain are we talking about on that sale?
Well, let's see.
After all your expenses.
Hold on. I'm just trying to figure that out real quick.
Yeah, not a problem because we're going to need that figure so then we could give you the proper advice.
Yeah, but
Well,
smart
yeah,
of you.
Let's see. That would be,
While you're calculating that out,
yeah.
it's
All right, and the other thing is, did you inherit the land, Dennis?
No. It's
You
it's
bought it.
Property
So
I
it'd
own.
go back to what you paid for it, any improvements, the expense of sale, okay?
It's just vacant land. There was no improvement.
Okay,
It's
so
just-
it'd be what you paid for it, plus improvements, plus expense of sale,
okay. Plus expenses or less expenses?
plus expenses.
If-
So what did you pay for the lot?
Well, it was actually it's one piece of property. I split off half of it. If I told you what I paid in 19,
I want to know what you paid for it.
I paid $5,000 for the whole lot, and I sold 41% of it.
All right, so your cost base is like $2,000, and plus your any improvements.
None. Nope.
What's your expense of sale?
13.5.
All right, so we got, let's say $15,000 cost. How much did you
Okay.
sell it for?
90.
All right, so you got about a $75,000 gain, right? Now you have Social Security, you said,
some
right?
interest.
And any other source of income?
Some interest, did you say?
I have some interest income.
What do you
Collecting
think?
CDs. Maybe 10 on the interest.
All right. Are you married or single?
Single at this point.
And how old?
Widowed, I guess you would say.
And how old are you, Den?
Over 70. Does that
Okay.
count?
All right, Chris, so give him
Yeah.
some good news.
So,
Oh, with the
He's going to
comp-
be 15%
yep, you're going to pay 15%
on the 75.
on the 75,000.
and you got the extra money for he's over the age
And
of
he'll
65.
get a partial deduction for not the full 6,000. You'll get probably around a 5,000 extra deduction
From the
plus
big,
your
beautiful
standard
bill.
deduction.
Right.
So your taxes are probably going to be very,
Very
minimal.
little.
Yay! Isn't
Very
that good
little,
news?
Dennis.
Wonderful.
And
And-
is
Now,
but
that's
New York
not true
State's
on New
gonna
York
tax
State, though.
you.
Let's talk about New York State.
That's federal, right?
Yeah.
And
That's
then New
federal.
York State would be.
and you don't have a mortgage on your personal house, right?
No, it's all paid. Yes,
Okay.
Yeah. So
Yeah,
New
but
York,
on New York State, they don't like you as much as the
yeah,
federal
the New
government.
York State's going to be around $5,000.
Right.
Probably.
But still not earth-shattering.
Oh, okay. New York.
yeah. If you want to call us at the office during
Then we'll
the week,
work up the real numbers for you. But this is,
Okay.
I think you can sleep well tonight.
Oh, wonderful.
I wonder, should he do an estimate on New York State, you guys? Before-
kind of late.
It depends on what he had last year in liability.
Yeah, I was thinking
Right.
about that.
All right, Dennis. Hey, thanks for calling.
Okay. Yes, thanks for your help. Tom.
All right,
Good,
bye-bye.
smart man. Another the smart lady,
Yeah.
the smart man. I mean,
But-
it's good to ask these questions and plan.
Because really, it's it's so scary when you talk to people because they make you sound like it's going to be earth-shattering. But the way the tax code is set up, there's all these loopholes, and if you turn left, you can hop on your right foot, and then you save 3%, and all this stuff. All right, speaking of that,
Sounds like a commercial.
how much do you pay taxes if somebody gifts you money?
A gift goes back to the original basis, but if that's a land or a asset,
Let's say
But
somebody gives you money.
cash is nothing.
So if somebody gifts you money, it's tax-free
Correct.
completely.
Yes.
yes.
Right,
Which is what a nice thing.
right. So now, if they gift you an asset, that it's a horse of a different color.
It is.
right.
That was what I was alluding to
Well,
at first. Yeah.
It depends what you do with that asset. The gift itself is tax free.
Right.
If you were to sell the asset, then it would be taxable, but depending on what the cost basis was of the person who gifted it to you, and then what you sold it for. So then there would be capital gains.
Right. That would be if you got a capital asset, right?
Correct.
Right. So if I decide to walk down the street and give you $500,000, how much do you have to claim as taxable income?
0.
Absolutely zero. Correct. Now, the problem comes in the donor, the person that gave you the $500,000, they have a problem, right?
They have
Yeah, a
to do
little
gift
one.
tax return. They have to do a gift tax return.
Right. So what does that mean?
It's just a bookkeeping form that you do at the end of the year. It's a gift tax return so that the IRS knows where you are in your lifetime exclusion.
So your exclusion right now is $15 million.
Huge.
So if I decide to walk down the street and give Chris $500,000,
Woohoo!
then I as the donor have to do a gift tax return. I'm entitled to take away $19,000 of the money that I gave Chris because that's what they allow you every year. And the rest of it would be reported on my gift tax return. And if my estate is worth less than $15 million, how much would my estate have to pay in taxes on that?
Nothing.
Nothing. Right?
Yep. And so it's just a way of them keeping track of that exclusion.
Right. So many times when you talk to people, they're so afraid to give a gift because they think they're going to pay taxes on it. But really, it would have to be a lollapalooza of a gift.
It would really have to be a humdinger.
Right.
Significant. Really.
Okay. And then going back to, all right, so that would be tax-free. How about if you work overtime? Now, this is the recent change in the tax law.
Oh, the recent law gives you help if you're, if it's the amount, not your base pay, but it's the amount over your overtime. And how much did the big beautiful bill allow us to exclude every year, Chris, if you get overtime?
That's up to $12,500 for a single. A joint return, it's $25,000
In tax-free money.
in tax-free
So
money.
if you have worked overtime, and this is interesting, they just sent us a notice from the IRS that says the employer is supposed to provide you with that income, that information, but if they don't, the employer's not on the hook. So this will be interesting because when you listen to Ask the Tax Lady, we're going to find out about how that's all going to be how that's all going to be handled. Anyway, I'm Esther Gulias, the Tax Lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And right now we're going to take a short break for the news, and we'll be back on the other side. Hey, to us, you are family, and I want to encourage you, if you have any questions, you can go to our website at egtax.com. You can call our office, and we have people, like real people, that will talk to you, and we're not going to charge you. Because we feel the best way to do business is to make people understand that we're in their corner. Are we perfect? No, but we try to be. And if there's anything we ever do that isn't up to your standards, we want to make sure that we get it right. Right?
That's right.
Definitely.
All right. I'm Esther Gulias, the Tax Lady, 8030930, 8030930, star 930 on a cell phone, 716-8030930. And we got a question on a text.
It's a text that says, so will refunds be better with the big, beautiful bill?
All right. So assuming that you haven't changed any of your withholding and any of these situations are pertinent to your tax situation, such as now you can itemize, you have a car loan that you've been paying interest on that's deductible, you had overtime, you got tip income, you're a senior, yes.
Yep. So let's break that down again. Like we just said, we just had an example. If you are getting overtime income and you're single and it's over $12,500 or $25,000 for a married couple, you get to exclude that, which is so exciting. And $25,000 if it's tip income. What did I do? Tip first? Tip and overtime. And so it's very, very exciting. And then if you get a new car and it's a U.S. car or manufactured mostly in the U.S., you get to deduct, if you get a loan on it, you get to deduct a percentage of that loan that you have for that new car.
You get to deduct all the interest. And if you itemize, that you couldn't before because you were limited by the SALT deduction, that's now moved up to 40%. So a lot of people are going to itemize that haven't in a long time. So is the one big beautiful bill good for people?
Oh, yeah.
Yes. I have to tell you, though, okay, let me ask you guys this question.
For seniors, too.
I mean, I eat out all the time. Mm-hmm. Do you think that the servers realize that they don't have to pay taxes on their tip income?
No, I don't think they realize.
I mean, because like now they're saying, do you want to give them 25%?
It's a lot of money.
And they get to not pay taxes on it.
I don't think they realize. I don't think the people who are leaving the tips realize. I don't think the
I don't
management
think anybody realizes it. It's really bizarre.
Yeah, it's.
I mean, here you're saying to somebody, okay, so you made $50,000 and you don't have to pay taxes on 25,000 of it, and you're going to save taxes of $3,000, but I'm still giving you 25%.
Did you think ever that would occur in your lifetime that that would tip income or overtime
never,
would be?
never.
Could you ever have written that? I
No,
mean,
never, never, never.
Very.
So
strange.
anyway, and so right now we're in this like learning curve. I think that people heard that their overtime is tax free. I think people heard that tips, by and large, are not going to be taxable. I think seniors heard that they're going to get a $12,000 deduction. But I don't think they understand how it all shakes out. Would you agree, Chris?
Oh, yeah. And plus, this is only a federal deduction, not a New York State deduction. And like you said before the break, they're going to give employers this year to get their act together and not penalize them. I mean, and I could see that because it was changed in July and it was retroactive back to January 1st. So the tips would be pretty easy because the tips are already reported. There's the Social Security tips on the W-2. The overtime would be hard.
But I'm going to
back,
tell you,
but-
it looks like it's going to be up to the taxpayer to determine how much legally they had in overtime, right?
Yeah.
That's what it looks like based upon what I can see with this ruling that just came down from the IRS on Wednesday.
It's going to be interesting.
But we will let you know. We will let you know.
You wanna do one of these
I'm
callers?
Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Tam. Fran, how are you, Fran?
Hi, Esther. I hear you're sick.
Well, you know
Chicken noodle
what?
soup.
When I get a cold, I always get it in my throat. It settles in my throat. So anyway, I sound worse than I am. What can I help you with, Fran?
Well, I always understand that I'm retired and I make my yearly income is $21,000 a year,
Okay.
and so I hadn't filed because it called at one time and you said I didn't make enough money to file income tax.
Okay.
Is that right?
Well, what consists of...
what is the income from? Is it from wages? Is it from Social
No,
Security?
it's Social Security and my 2 small pensions.
All right. So how much from Social Security? How much from pensions?
Oh God, I have to look.
Ballpark.
About.
Well, okay. It's let me see, 730, about 825 from pension, and
And the rest from
think
Social
nine-
Security.
yeah, right,
All right. So, and you're single.
yeah, and I wanted to know if I could could get that rebate or whatever it is the state is doing if I
All
haven't
right.
filed.
So you do not, based on that information, you don't have to file a return. There was no withholding.
But should she have gotten the Kathy Hochul money?
Wait, hang on. There was no withholding, right, Fran?
No.
You didn't pay anything in. So you're good to go. Now, because you didn't file a return, Kathy Hochul doesn't know that you are a taxpayer in the state of New York. So you want to make sure that you get, pardon me?
Chris is shaking his
That's why I
head.
called you.
Chris,
Yeah.
why are you shaking your head?
Because it's too late to file.
Oh,
To
she
get-
missed it?
Okay.
Yeah, 23. You had to file your 23 return by October 15th, unfortunately.
Oh gosh, you guys
So
should
you
make
missed
a
out
board
on
game.
$200.
Well,
You know, and that's the really sad thing
She called us
is you
and
never
asked us.
know retroactively what they're going to do and say that, oh, we want to give you money, but we're going to base it on 3 years ago.
well,
Yeah. Well, that's okay. I was just wondering, because I heard another lady talking about that, and everything
Yep.
changes, and I never know what's what. So it's good to know I don't have to
Right.
pay income taxes
Right.
anyway. So, okay, thanks.
All right, thanks,
Well,
Fran.
question.
Thank you. You know, and that's the whole thing. Did she have to file a return? No. But who would know in their looking glass that 3 years, 2 years down the line, that the government was going to say, let's look back to 2022, and those people that filed a return, we're going to give them some money.
Yeah, and in our slight defense, I hate is that I know Chris had been toting that date for a long time and beating that drum, right, Chris, and saying get your 23 in by this date. So
Well, you know,
but life is busy.
right. And the thing is, maybe she didn't catch the show.
Oh my gosh, yes.
Feel bad. Okay, we're going to go to Josh. Hey, Josh, how can we help you?
Yeah, hey, thanks for taking my call. So my question actually kind of parlays a little bit with your previous caller. So I have yet to receive the 200, well, in my case, because I'm single, would be $200 rebate check
Yep,
from New York State.
Yep.
I used to live in Erie County. I don't. I live downstate now. But my understanding is that, based on, filing your, I think you just said it, 2022 tax return, which
Right.
I did.
You had a
mean,
different
I've been
address.
filing I have a different address.
At
Yeah, and I've
2023,
yet to-
Josh.
I lived in Buffalo in 2023.
Okay, 2023 address.
So on your 23 return, you used your Buffalo address.
Correct.
Yeah, so you're going to have to
Contact him
contact New York State.
Tax
and say, guess what, Josh just moved downstate.
and my new change of address.
Right, and they'll do a change of address for you.
And the
Yeah, I mean, I did, obviously when I moved, I did a, change of address through the post office.
But they don't forward refund checks. So just contact New York State. If you want to call our office, 632-7886 on Monday. We'll give you a phone number to call New York State directly.
Okay.
Sorry
All right,
about
great.
that.
Thank you
But
so
you'll
much.
still get the money,
Yeah, I know.
unlike our last lovely lady.
It's going to be a pain in the
Yeah.
keister, right?
Yeah.
Yeah.
And oh, by the way, thanks, Chris. You did my tax return. It's been about 10 years, but you did it for me at your office on Niagara Falls Boulevard. So.
Okay.
Where do you live downstate, may I ask?
Endwell, New York. That's
very
it's
pretty.
near
Lots of
Binghamton.
hills.
Binghamton?
Yeah, lots of hills. Yeah,
Very pretty.
It was a family move. Me and the other half, we made the move. I love Buffalo. 27 years in Buffalo, UB alum. So
Yeah.
Go Bulls. I'm a UB
Yeah,
alum too. Great school.
yeah, we miss Buffalo, but it was a family thing. So,
Well,
but
Well,
anyway, guys, thanks
we're glad. Thanks for listening, Josh.
We love the show. Thank you.
Thank you. All right. I'm Esther Golias, the tax lady from EG Tax.
So if he-
8030930, 8030930, star 930.
he knows Chris.
on a
He
cell
should
phone.
you should call Chris on Monday, and
Right.
Chris will give him that phone number, 716-632-7886, and Josh will be sure to give.
But
Chris
here's
phone
the
number.
thing. So many people are tuned into this $204 to $100 check, right?
Yep.
And yesterday we were working on our commercials for this tax season.
You've been working on it for a long time.
And kind of one of the themes of our commercial is you spend money to go to get coffee. You spend money to get your car washed. You spend money to pay somebody to cut your grass. But yet when it comes to doing your taxes, you say, oh, crap, I think I can do it myself. And you shoot yourself in the foot.
Yep.
I mean, it is so frustrating to me because, it's so sad that this sweet, lovely lady, of course, we wouldn't have known to do a return anyway because you didn't have to file. But, to not have anybody to talk to and you end up losing money. And sometimes it's $100, sometimes it's $400, sometimes it's $800. We've had that one lady that missed her earned income credit, Chris. How much did she end up costing herself?
I'm sorry, what was that?
The
again?
lady that had EICs and didn't file for a number of years. How much did she cost herself?
Oh gosh, that was easily $5,000 a year to $8,000 a year.
Yeah, it is so sad. I know a lot of people say, well, that's because taxes are so confusing. They are.
Yep.
They are. But so many things in the tax law are so beneficial to people, you cannot believe it. And that's part of what we do is we do counseling. We say, okay, so we got this extra $12,000 for you and your wife this year. Go take money out of your IRA. because you're not going to pay taxes on it, right?
That's right.
I mean, that's part of what we do.
Yep.
All right, I'm Esther Goliath, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back on the other side. I hate it that they're going to play tomorrow, but I love it. It's like, what is wrong with me? I think I need psychiatric help. Anyway, I'm Esther Goliath, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We talked about, we're talking about different forms of income being taxable. We talked about overtime. We talked about tip income. And here's a favorite of mine. If I told you you could make $500,000 in taxes tax-free, wouldn't people line up at the door?
Oh, hello. Yes.
But it's on the sale of your personal residence. So if you lived in your personal residence 2 of the last 5 years, you're filing a joint return. The first $500,000 in gain you make is tax-free, and you don't have to reinvest it. You don't have to put it in an IRA. It's tax-free.
Pretty cool. But the thing is people aren't lining up at the door.
But people say, "Oh, but I hate to sell I love my house." Well, I never love anything as much as this making money and not having it be taxable.
Yeah. Yeah.
All right. We have Steve from Cheektowaga. Hey, Steve, how can we help you, sir?
Hey, folks, got a question for you. I'm in the electronic payment. You know, I have a federal electronic account that I pay my estimated taxes. And I just made those yesterday, and I was told there's a recording there that next year, 2026, we're not going to be able to use the system anymore, that we're going to have to either make an account, an IRS account, or an IRS direct account. What's the difference?
So he's saying you can't do the payments electronically anymore is what he's saying.
Well,
without an account.
Without an account.
Yeah.
So you know what they're doing,
that's true because of
Steve?
fraud
They're
security.
moving to what they're trying to do is make it so that you have a level of protection and they have a level of ease of making sure that everything is in there correctly. So it's not. Chris, you don't think it's hard to make an account, do you?
No, that's ID Me, and my daughter Gracie, who works at the office, sets up accounts for people all the time, right, Chris? Isn't that like her?
So, Steve, just call us at 632-7886 and ask for Grace, and she does ID Me all the time, and we'll set you up an account so that you don't have a problem going forward, because they really want they want to make sure that the money is going into your account specifically and that they can track it.
What's a direct? They said IRS, either that or an IRS direct account. What is that? Or I'm sorry, IRS direct pay.
Well, that would be right from your right when you file a tax return. You can fill out a form for auto debit, and you set it up so it would come out on April 15th, June 15th, September 15th, and January 15th. It's preset.
Right. So this gives you, by doing ID Me, you have the flexibility that you wouldn't have if you set it up when you file your return originally, which says that it has to be a certain amount every quarter. So I would suggest you do the ID Me.
Okay, and more flexible. Okay, because with New York State, I send in.
Well, ID Me is not New York State.
Oh, no, I know, but what I do in New York State is I order the IT 2105 and mail in the voucher with a paper check.
Right.
Okay.
Yep. Smart.
All right, but call Grace. She's really good, 632-7886, and she will be very, very happy to help you, Steve.
Okay, thank you.
You're welcome. All right, bye-bye. I'm Esther Goliath, the tax lady from EG Tax, 8030930, 8030930.
I gotta say, when we can get transcripts electronically and I can put it in my secure mailbox at the IRS, and so I had to set up one of those accounts, and so they literally take a picture of your face, They make sure that the face matches. They have to have a dual security push. And so it's just all for fraud and just to make sure that you
right.
are
And
you.
especially, I mean, certainly if you guys are listening, you know fraud. How many of you get 8,000 phone calls a day? I mean, you know, I am
Selling.
so sick and tired of people saying, "Hi, do you have Medicare Part A and B?" And I mean, and or you know, we want to help you with your prescriptions. I mean, whatever happened? All of a sudden, do you guys get lots of phone calls?
Oh, I get mortgages.
I don't even. My phone used to be family and friends, and now it's salespeople.
It's just crazy. I said this today. I got a phone call. This guy gets on the phone and he says, "I'm Eric on a recorded line." And I said, "Eric, do you realize you're the 300th caller of the day that I've gotten about what you're doing? Do you really think that what you're selling is going to have anything to do with me? Go
Right.
suck a pickle." I wanted to say a lot worse, to tell you the truth. All right.
Want
so
me to
let's-
read another text?
All right. Yeah. What do we got?
So it says, "Hello, glad you're back this week. Is there a method of how and when New York State is sending out the $200 or $400 checks?"
They already have.
Well, it was from October through the end of November.
Okay, so we
there's
still
still
have some
3
time.
more weeks.
And I can't think of any method in which they
No.
were doing it, alphabet or anything like that.
All right, and the next one?
So they just still have 3 more weeks. The Kathy Hochul refund check. My husband and I own a house in Erie County, and we got $300. My parents also own a house in Erie County,
But they got a check
but
for
they
$400.
got a check for $400. Why do the amounts different?
Must have been income, would you think?
Yep.
Yep. Because it faces out based upon your income. So that's what it should have been. That would be off the top of my head, but you get less if your income's too high.
You agree?
Correct.
Chris?
Right.
Yeah.
Right.
And so your mom and dad's income is lower.
Okay, so let's talk more about money that isn't taxed. Social Security benefits are not taxed if your income is low enough, right?
Correct.
So even though I know that President Trump says Social Security is not taxable this year, it's not true. What seniors got this year is this extra deduction of $600 if you're single, $1,200 if you're $12,000 if you're filing a $6,000, $12,000 if you're filing a joint return, and that doesn't necessarily make your Social Security tax-free. It helps, but it doesn't necessarily make all your Social Security tax-free.
Yeah.
Right?
Yeah, it doesn't. And so he's really good at PR, but he's PRing it wrong a little bit.
Right. And then let's talk about income that's taxed after expenses, self-employment income. So if you're somebody that has a business and you have income, then you get to reduce that income by your expenses. Then on your bottom line, you pay income taxes and self-employment taxes if your gross income after expenses is more than $400. Right?
Correct. Yeah,
Rent-
that's why it's really important if you're a self-employed person to keep track of all your expenses. Last night we went to a pottery place, and she's self-employed, and so she's got to monitor all the money in and the money out, and so you really want to be conscientious and diligent of doing that.
Because that really makes a lot of difference.
Yep.
If you are somebody who flies by the seat of your pants and you don't keep track of your expenses, you might underestimate.
Yeah, one fly in the ointment that I find that self-employed people, don't do very well at is their inventory. And so we're approaching the end of the year, and so they really gotta look at their inventory for the end of the year because that attributes to your cost of goods, and so
Right.
you really want to make sure you do that.
Right. All right. The other thing is rental property. That's another thing. You got gross income at the top, and you get to reduce it by your expenses. And same thing with farmers, and then capital gains. We many times talk about a stepped-up basis. Who would get a stepped-up basis if they were to inherit an asset?
Well, you just answered that.
If you inherit, you get a stepped
You're
up
right.
basis.
It's if you, mom or dad, aunt, uncle, your neighbor dies and they leave you stock, you get the value of the stock at the date of death, not at the date of purchase.
Or a house.
Right.
Right. And so that could really save you a ton of money.
Yeah.
Right. And then the other thing is income that's taxed after expenses would be corporations and partnerships. Right.
Yeah. That's right.
Income that's taxed unfavorably, losses from rental property. How could that be?
Well, that's
because you're limited if you're a high income person or if you're
all right. So
moderately
let's
high
talk about
income.
that. If you have income over $100,000 and you have a rental loss, you start to lose the deductibility of the rental loss.
Yep,
right?
it's
Right.
suspended. Yep.
Right. So if you make $150,000 and you have rental losses, can you take any of it?
No,
Not at all.
and for someday,
Not unless you're a real estate professional.
if you sell it or if your income drops.
Right. Then. But all those years you got to wait.
Correct.
A lot of people that I've seen, they said, "Oh, well, I just bought this house in Florida," which they say everybody's going to be leaving New York State because of all that's going on. But if I have this house in Florida and it's costing me a fortune, at least I get to deduct it. Not necessarily.
Yeah.
And even if you can deduct it, how much is your loss limited to, Chris?
well, 25,000.
25,000, right. Okay, net operating losses. That's another thing that that is unfavorably taxed, right?
Yeah.
Because you have to carry it forward. Investment income from a dependent, kitty taxes.
Yeah. If it's more, if you have to pay taxes on kitty income.
If you have a child, a dependent, and they have passive income,
Yep.
you might have to pay taxes at the parent's rate, even though the kid made so much less income.
Right. But the thing is that's changed. Oh my gosh, so much over my career. It used to be 3 years old and younger. Then they went to 10 years old, 13, 18, and now it's all the way up to
Any dependent.
any dependent. And now it's up to age 23.
And not in a positive way, right?
Right.
All right. Well, okay.
You got
All
a
right.
second or a second. I also want to say that Gracie and company are going to do the turkey trot, so EG Tax will be out there representing, and we're here for you throughout the week if you have any questions. So make sure you call 632-7886 or click egtax.com and go Bills and go Sabres.
Oh yeah.
And then
the
Bandits.
Sabres. I
When do
forget
the
about the
Bandits- when do
Sabres.
the
End of the month.
And the Bandits start at the end of the month.
Yay. Okay, I'm Esther Golders, the tax lady with Tiffany Fabian, Christopher Fabian. You can go to egtax.com. We're here to help you. Look, we only got, 7 weeks before the end of the year. Listen to us. I'll talk to you next week. God bless. Bye-bye.